Hey guys, what's up? It's Annie. And welcome back to my channel. Today, we're diving into the fascinating history of financial services and how they've evolved over the centuries. I mean, have you ever thought about how different things are today than they were like 200 years ago? Like, imagine trying to buy a coffee with a chicken because that's basically what people had to do back in the day. From those ancient barter systems to the cutting-edge blockchain technology we hear about today, we're going to explore the key milestones that have shaped the way we think about and use money in the modern world. So, buckle up, hit that like button for the YouTube algorithm, and let's get started. Okay, so before money existed, and yes, there was a time before money, people relied on something called the barter system. Basically, it was just straight-up trading goods and services directly. You have a cow, I have some wheat, let's make a deal. Sounds simple, right? Well, not so fast. Bartering had some serious limitations. Imagine you're a farmer who needs some tools, but the only thing you have to trade is a whole bunch of wheat. What if the toolmaker isn't hungry? What if they need lumber or cloth instead? This mismatch in needs made bartering quite inefficient. See, finding someone with exactly what you need who also needs what you have was a massive headache. It was like trying to solve a complex puzzle every time you wanted to make a trade. It's like trying to find a parking spot in downtown LA on a Friday night. Nearly impossible. The inefficiency of the barter system was a major obstacle to economic growth. This is where the idea of a common, standardized form of currency started to emerge. People needed a more reliable and efficient way to trade. People needed something more practical, something divisible, something durable that they could use for transactions. This led to the creation of early forms of currency. And that's how we got early forms of currency. Think cowrie shells in ancient China, beads, salt, cattle. Yes, even cattle were used as currency. These items were chosen because they were widely accepted and had intrinsic value. But eventually gold and silver emerged as the top contenders. These metals were rare and had a high value-to-weight ratio. They were rare, they didn't spoil like that wheat we were talking about, and they could be easily divided into smaller units, making them much more practical for everyday transactions. Plus, they were durable and could be stored for long periods. This shift to using precious metals as currency was a game-changer. It simplified trade and allowed economies to grow and become more complex. It was like going from dial-up internet to high-speed fiber optic, a total revolution in how people conducted business. The introduction of standardized currency laid the foundation for the complex economies we have today. As trade flourished and societies became more complex, simply using gold and silver wasn't cutting it anymore. People needed a safe place to store their wealth, a way to manage their money more efficiently. Enter the world's first banks. Now these weren't exactly the banks we know and, well, maybe not loved today, but they were a start. In ancient Mesopotamia, temples acted as early banks, providing secure storage for grain, precious metals, and other valuables. It was like a proto-vault, if you will. Fast forward to the Renaissance period in Italy, and things start to look a little more familiar. Italian merchants, known for their business savvy, established banking houses that went beyond just storing wealth. They introduced lending practices using something called promissory notes, basically early IOUs, which helped facilitate trade and finance new ventures. These early Italian banks also developed systems for exchanging different currencies, which was crucial in an increasingly globalized world. Imagine trying to buy spices from India with Florentine florins. You'd need a way to convert those currencies. These innovations laid the foundation for the modern banking system we know today, with institutions that manage deposits, provide loans, and facilitate financial transactions on a much larger scale. It was a game changer, paving the way for economic growth and expansion. Fast forward to the 18th and 19th centuries, and the world is changing dramatically. The Industrial Revolution is in full swing with new inventions and factories popping up left and right. But all this innovation required massive amounts of capital, money to build factories, hire workers, and get those steam engines chugging. This is where stock markets came into play. Instead of relying solely on banks for loans, businesses could now raise capital by issuing shares of stock, essentially selling small pieces of ownership in their company to the public. This allowed them to access larger pools of money and fueled rapid industrial growth. Of course, with this new way of investing came the need for a centralized marketplace to buy and sell these shares, and boom, the stock exchange was born. The London Stock Exchange, the New York Stock Exchange, these institutions became hubs of financial activity, connecting investors with businesses seeking funding. And as you might imagine, banks didn't just sit on the sidelines during this period of rapid economic expansion. They played a crucial role in facilitating these new investment opportunities, expanding their services to include things like savings accounts, personal loans, and even insurance. The financial world was becoming increasingly sophisticated and interconnected. Okay, let's fast forward again to the 20th century, a period of rapid technological advancements and significant changes in the financial sector. The digital revolution is upon us, and it's about to turn the financial world upside down. This era saw the birth of computers and the internet, which would soon become integral to our daily lives. Remember those massive mainframe computers that took up entire rooms? They were the giants of their time, processing data at speeds that were groundbreaking back then. Well, as technology advanced, computers became smaller, faster, and more accessible, paving the way for a complete overhaul of financial services. This miniaturization and increased power opened up new possibilities for banking and finance. One of the biggest game changers was the introduction of the ATM in the 1960s. This innovation allowed people to access their money without needing to interact with a bank teller. Suddenly, you didn't need to rush to the bank during business hours just to withdraw cash. ATMs provided a level of convenience that was previously unimaginable. ATMs gave us the freedom to access our money 24/7, making banking way more convenient. This was a significant shift towards more flexible banking solutions. Then came credit cards in the 1950s, which completely revolutionized how we make purchases. These small pieces of plastic changed the way we thought about money and spending. No more carrying around wads of cash. Credit cards made transactions simpler and more secure. Credit cards offered a line of credit, allowing us to make purchases now and pay for them later, while also making online transactions possible. This opened up a whole new world of shopping and financial management. But the real revolution happened in the 1990s with the rise of the internet and online banking. The internet connected us in ways we had never imagined, and banking was no exception. Remember the days of actually having to physically go to the bank to check your balance or transfer money? Those days quickly became a thing of the past. With online banking, we could do all of that and more from the comfort of our own homes 24/7. This meant no more waiting in long lines or dealing with limited banking hours. It was a complete game changer, making banking more efficient and accessible than ever before. The convenience and speed of online banking have transformed how we manage our finances, making it easier to stay on top of our financial health. And finally, we arrive at the 21st century, where the pace of technological innovation is just mind-blowing. The advancements we've seen in just the past few decades are nothing short of revolutionary. This is the era of Fintech, financial technology, and it's transforming the industry at warp speed. From mobile banking to online investment platforms, Fintech is reshaping how we manage and interact with our money. Think mobile payments like Apple Pay and Google Pay, which let us leave our wallets at home and make purchases with just our phones. These innovations have made transactions more seamless and secure. It's all about convenience and speed. The ability to pay for goods and services with a simple tap or scan has revolutionized our daily lives. Then there's the rise of cryptocurrency and blockchain technology. Bitcoin, Ethereum, and other digital currencies are not just buzzwords. They represent a new frontier in financial innovation. Dogecoin. You've probably heard of these digital currencies that are shaking up the financial world. They offer new ways to store and transfer value independent of traditional banking systems. Blockchain, the technology behind it all, is essentially a decentralized, secure ledger that can record transactions and track assets in a transparent and tamper-proof way. This technology is not just limited to cryptocurrencies, it has applications across various industries. This has huge implications for the future of finance, potentially making transactions faster, cheaper, and more secure. Imagine a world where financial transactions are instantaneous and free from the risk of fraud. And let's not forget about artificial intelligence, or AI. This technology is already making waves in the financial sector. It's already being used in finance for things like automated trading, where algorithms make split-second decisions to buy or sell stocks, robo-advisors that provide personalized investment advice, and even fraud detection systems that can identify suspicious activities in real time are becoming more common. AI has the potential to make financial services more efficient, personalized, and accessible to everyone. Imagine having a financial advisor that's available 24/7, tailored to your specific needs. From the early days of bartering to the digital revolution, and now the rise of Fintech, the evolution of finance has been a wild ride. Each era has brought its own set of challenges and opportunities. And the most exciting part? We're just scratching the surface of what's possible. We're still in the early innings. The innovations we're seeing today are just the beginning of a much larger transformation. The future of finance is all about decentralization, automation, and real-time transactions, with technology playing a bigger role than ever before. The possibilities are endless, and the journey has only just begun. With AI, blockchain, and digital currencies gaining traction, financial services are shifting toward decentralization, automation, and real-time transactions. The future of finance is digital, secure, and more accessible than ever before. It's an exciting time to be involved in this space, and I can't wait to see what innovations emerge in the years to come. Subscribe and stay updated. If you found this video insightful, don't forget to like, share, and subscribe for more updates on fintech, investing, and the future of financial services. I'm always looking for new topics to cover, so let me know in the comments what you'd like to see next. Thanks for watching, and I'll catch you in the next video.